Hey, welcome back to the channel. This is Alex, and in this video, we're going to check out the technical view of all the major markets. That includes Bitcoin, S&P 500, the NASDAQ, gold, the Russell 2000, and Ethereum. And at the end of the video, I'm going to show you my proprietary market monitor, which gives me some insight into the market's internals, and that gives me some insight into what the market could do going forward. If that's what you're into, stick around. All right, so what you're looking at here is ticker symbol IBIT. This is the Bitcoin Trust. And yeah, so on our last video, we said that, Bitcoin was looking very bearish because it broke out of this range right here. It tried to spring and it failed after the the Jackson Hole announcement, and that we were getting very bearish to neutral on Bitcoin. And yeah, by the end of the week last week, because there is no trading today because it's Labor Day. So happy Labor Day to everybody. The Bitcoin ended up pretty bearish here. So as you can see here, I have a couple things on my chart. I have two clear moving averages. This green one, which is the yearly moving average down here. This red one, which is the quarterly moving average. This yellow one, you can kind of see it here. This is the 16-period moving average. And then we have a anchored VWAP from the Fed day / the employment numbers here in white. So as you can see here, we turn neutral on Bitcoin after this candle here because this was kind of the point of control candle that it broke out of, where everybody went short and then got stuck. And so if it stayed above that candle, Bitcoin was to stay bullish. But now that it broke below, it's going to neutral. And given the strength of this Friday candle, it's actually accelerating. So it's becoming a little bit more bearish tinted on the neutral side. Now, I know the Bitcoin market is open. I haven't checked it, but I'm just doing TA on the ETF here. So the ETF is actually going into this kind of demand area, which is this is kind of the breakout point. So I'd expect there to be some support. So, maybe for this week, I don't think Bitcoin's going to really do anything because it's below the quarterly moving average and it's into this area. Now, if it breaks through this, we could totally see it go down to the yearly moving average, which would be, let's see, 12% lower. So that would be my take on Bitcoin. It's probably going to go sideways in this range this whole week. Or if it accelerates here, it's going to hit the yearly moving average. But nothing to see there. That's pretty neutral to bearish on Bitcoin. So let's go move on to the S&P 500. So this is the S&P 500, same moving averages as I said before. This is actually a stronger index than some of the leading indexes, like Bitcoin is leading and the NASDAQ is leading. So this doesn't really have the same sort of structure as, let's say, the NASDAQ with the head and shoulders kind of a pattern, but it's still there. But it's a stronger kind of head and shoulders pattern. As you can see here, this is kind of the neckline right here, and then boom, boom, boom. It's called, Wyckoff calls it shortening of the thrust. As you can see here, this is a up wave right here and another up wave right here, and this has been weakening, right? So we have here, and it's been weakening. So I would expect, going into September, the S&P 500 looks like it wants to pull back. And where would it pull back? First of all, it could pull back here to the 16-period moving average, maybe tomorrow, or maybe it gaps down and hits this VWAP from the Jackson Hole, the Fed meeting and the employment numbers. And then we could see it kind of pull back to this average right here. All right, so let's move on to the NASDAQ. All right, so as you can see here, this is the NASDAQ, ticker symbol QQQ. And now this is a leading index. And as you can see here, it is leading to the downside. The head and shoulders top is a little bit more prevalent compared to the S&P 500. So what I can do here is I can just go back and forth. This is S&P 500. This is QQQ, S&P 500, QQQ. So obviously the QQQ is weaker. And, what we saw at the very beginning of the video, Bitcoin is the weakest. So the leading indexes are weak. So that means, it's pushing towards a pullback. And I've made the case in many previous videos that the Qs are at a very perilous spot right here, where this is the uptrend from 2023, the bull market. We broke out of this larger head and shoulders pattern, broke out, and this is basically just a extreme back test of the neckline, and we could go into another bearish market. We've kind of seen that in the past, like in 2015. So that's kind of what I'm thinking here. And as you can see, like I have some of these lines right here. Don't mind those lines. Those are because I'm short the Qs. So these are just some. I put a collar on, and I put I sold some credit spreads. In the QQQ. So don't worry about those. But I think QQQ looks very vulnerable here going into next week. The first target I would see, because it's right here on the Anchor View app from the employment numbers, that definitely the quarterly moving average is in reach. And that would be my next target, for a weekly move. We could totally see it, boom, down, what is that? 2.5, let's call it 3%, for the week, or going into the following week in September. So September is going to be a perilous month. So that's what I would call for. It would be a bullish pullback. I'm bullish longer term still, even with all this stuff I've said. But yeah, it doesn't look so good for the QQQ. So let's move on to gold. Now, gold is typically a hedge, right? Gold is, a safe haven asset, and hey, it's acting like a safe haven asset. It's breaking out of a multi-month range, bounced off the quarterly moving average. What we said on previous videos was the waves, the down waves inside of this range are getting much stronger, right? This is the initial down wave, which was about a 7% drawdown on average. And here's the second down wave. Let's just call it 4%. Now, here was the spring, which was down equal. It was down, let's say, 4%, 4.5%, right? So it's a reignition of the aggression, which is like what you like to see in a bullish range at this point, right? A reignition of the aggression, but then a V off of that, and then a very weak wave of about, let's say, 2%, and then that produces the rally. And that's basically the view on gold. Topping action with all this volume right here, pullback creates range, blah, blah, blah. So that's kind of what I see it as gold. And I know after hours, it's doing pretty well. So it's breaking out of this range. So yeah, gold looks great. There's nothing else to see here. There's some supply coming in to this ETF here at the top of the range, which is a breakout buy potentially, or there's sellers there, but we haven't seen a lot of sellers come into the top of the range. I've talked about on previous videos that we did see spikes all along here at the bottom of the range. So these guys were accumulating, and then here they accumulated a little bit higher. So that's bullish for gold. So let's move on to the Russell 2000. Okay, so the Russell 2000 is a little bit different than the SPY and the QQQ. And that's typically what you see going into more bearish markets, right? You see the equal weight, or you see the small cap stocks do better. And people are saying, okay, why? If the economy is getting bad or blah, 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 there's going to be some news. Why do the small caps outperform? Because typically when things are about to get bad, that means they're going to cut rates. And when they cut rates, small caps do well. So small caps are kind of, insulated a little bit from the economy and from bad news on the economic front because they're so tied to rates. So we're seeing a lot of strength in small caps. And as you can see here, this is the first down wave that every market, as we've seen, did pulled back. And then this down wave as well. But look at this. It's making new highs. So if we go back to the S&P 500, it's making new highs versus the S&P and Qs. It's much, much stronger than the Qs. So this is the strongest index at the moment, which is akin to more bearish markets, or when things are not doing so well in the economy, which is kind of counterintuitive, right? When there's bearish stuff going on in the economy and the market, the small caps actually do well. And when things were doing well, the mega caps do really well. So, I drew out some lines here on the IWM. We are nearing a major breakout here in the IWM. It broke out of this range right here. Now, back in 2021, we had this giant upthrust that caught a lot of people and caused the next bear market in the IWM. And so we are right there. We broke out of that level, and we are in upthrust watch territory for the IWM. So, if it was to get below, let's say this candle, that would be very bearish for the IWM. So it's kind of in a perilous spot going into September. But if it continues to show strength and kind of can rally this week in spite of September, in spite of everything, or even go sideways and stay above this key level, I'd still stay bullish. So IWM is bullish. And that's kind of what I see there. Breakout volume, nice breakout candle into this level. And then we're kind of holding at the highs of this candle. Super easy, super simple. And then our last market I want to take a look at is Ethereum. Ethereum is much, much stronger than Bitcoin. As we saw before, Bitcoin's breaking down out of a nice sideways action, and Ethereum is pushing highs. Now, we did have this giant volume spike, which is very bearish for Ethereum, and it's kind of at a top here, right? So I would expect, Ethereum could actually pull back here, or even just go sideways for a little while, because the action is this kind of action where we have a very large candle and it gaps down into it, and we're at the low end of this kind of a bullish candle. That's a very bearish scenario. So we could totally see it back test to here, and then that would kind of coincide with this quarterly moving average. And so, but it's still, above the quarterly moving average and the yearly moving average. So Ethereum is bullish. Okay, so let's move on to my market monitor and see what's going on over there. All right, so for those of you who are new to the channel, hey, thank you so much for making it this far in the video. I really appreciate every single one of you. If you like the channel and you like the content so far, feel free to hit that like button or smash that like button, and subscribe to the channel, and leave a comment if you have any questions here, because I'm just trying to help people, along with their trading journey, because, a lot of people did that for me. And so just trying to pay my way, back into the community here. So basically what the market monitor is, it's just a collection of data. It tells me where to go, like whether to buy or to sell or to be neutral. I've just, done some studies back in the day, or still study a lot, but, about how this stuff works, and I picked it up over time. And so essentially the market monitor gives me cycles, whether green, yellow, orange, or red. And as you can see, I'm going to post this picture here, about the number of distribution days and stuff like that. But essentially, the market monitor is currently orange, and we are day 5 orange, and we've gone 0.03%. The average orange cycle lasts about 4.8%, and it moves negative 1.13, and the distribution count is full. So, basically what that means is we could be going into a green cycle, but given all the stuff that I already outlined at the onset of the video, it looks like this orange cycle could actually, fail and not go to green, but actually reignite a red cycle if we made new swing lows. So I'm just watching out for that. And, the average orange cycle is actually negative 1%. So, we could see a 1% down day, and that would be totally normal and natural. So let's move on to the stage analysis. All right, so this is the stage analysis. This basically tracks every stock in the market and whether they're in uptrends, downtrends, sideways after uptrends, and sideways after downtrends. And on the left, you could see the cycles and you could see the dates. So basically, what I'm seeing here is the average 16. That's the average 16 periods, or the data from the last 16 periods, and whether the breadth or the number of stocks in uptrends or downtrends is in a uptrend or in a downtrend. And currently, the number of stocks in stage 2 and stage 1 are above their 16-period moving averages. So that is actually bullish, and that corroborates what we're seeing in the IWM and what we're seeing in the S&P 500. But it could change, and let's dig into some more internals to see if that's going to be the case. All right, so what you see here is this is a mixture of internal data. I basically take the distance from the 21-period exponential moving average and 10-period exponential moving averages, and I just track that. That's on the left side. So we're above all those moving averages, so that's bullish. The DD column, which is the drawdown, so we are currently in a negative 0.7% drawdown. And the index, by the way, the index I'm tracking for all this data is the IWV, which tracks a lot of the Russell 3000 stocks. So it's not showing the weakness from the Qs. So we're only on a 0.7% drawdown. The trend indicator is actually starting to turn up bullish, which is great for all the IWM stuff. Put call ratio is still bullish. Now the VIX is back up to 15, and this COR, this is the correlation index, the 1 month correlation index. And now what that means is that's the top 50 stocks in the S&P 500, and whether their options are predicting that they're going to be correlated, they're going to move together. And when stocks start to move together, that means it's going to be more bearish. So correlations typically go down when everything's at all-time highs and bullish, and correlations increase when we're about to go bearish. So I like to look at this and see, look at that. Like the correlation index went from 10 to 14 as the VIX stayed flat. So that's basically giving me an indication that we could see some bearish action going forward. So the 20B and the 20 bear column, nothing there. Higher lows and lower lows, 71 lower lows, starting to see some bearish action as we saw on Friday. And the bull C and the bear C, that just basically tells me if stocks are ending at the highs or the lows of the day. Nothing there. So let's move on to some overbought and oversold indicators. So as you can see, this BB45, pretty simple. It's just stocks that are above a 45-day Bollinger Band or below a 45-day Bollinger Band. Nothing to see there. Stocks that have made 5% moves, either up or down. Nothing to see there. Now, something to see here is the short-term momentum up. That is basically just whether stocks are showing momentum short-term to the upside or the downside. And as you can see, we got a sell signal on this indicator as it's gone from 197 down to 88, and now it hit 155. So that's a big sell signal short-term. So likely to see some weakness going forward. And then TD sell and TD buy are really good overbought and oversold indicators. We've been kind of overbought, as you can see here from the TD sell. And yeah, no oversold indicators on the TD buy. And this AI is the anxiety index, and we are sub 20,000, which is longer term to intermediate term, very bearish, because obviously there's a lot of complacency in the market, not much anxiety. So that's what you see there. So it's intermediate to long-term bearish. And then as you can see here with the 63P, that's just stage 2 stocks plus stage 1 stocks is 71 or 72, which is on the upper end of the, it oscillates from 100% to 0%. So we are on the bullish side of that, which could lead to some mean reversion down to 50%. And then the long-term NY and NQ, this is a long-term breadth indicator. That basically tells me if we're in a bear or a bull market in New York Stock Exchange stocks and NASDAQ stock exchange. So we are in a bull market in the NYSE, and that's kind of what you see there. And so that's basically it for the market monitor. All right, so if you guys made it this far in the video, hey, thank you so much. I hope you guys enjoyed the video. Feel free to leave a comment again, and I hope you guys have a great Labor Day and a nice week. Cheers. Have a good one.